Hello, today is May the 31st, nearly into June, and the first half of the year will be over. What is going on, Andy? We have a market which really doesn't know which way to go and which way to take all assets. It's really a headlines-driven market by Trump. He postpones tariffs, the market rallies like crazy. He reintroduces them, market goes back down. We get some data, the market more or less ignores it. But let's try to put things in order as to what happened
Sure.
last week.
Yeah. So last week, last time we spoke with you all, Trump had declared a 50% tariff on the EU because he was very mad at them. And the market had sold off fairly sharply on Friday afternoon after the close. This happened after the stock market had closed, that he imposed this 50% tariff. And by Tuesday morning, Memorial Day, soon after, actually, sometime over the weekend, Trump said, we've decided to wait until applying that to July 10th or whatever it was. Maybe it's 11th. And a new acronym was formed. It's called TACO. Trump always chickens out. And the market loved it. The market rallied heavily on Tuesday and then into Wednesday. The market gave back some of that rally, but Wednesday night after the close, NVIDIA reported earnings that were quite strong demand for in line with expectations with a little bit of a beat, but strong demand for their product, which should surprise no one, frankly. And perhaps more importantly, at least at the time, was that the courts, that the trade court, that oversees the president's tariff regime and was dealing with a case from importers or exporters. I'm not sure who was the plaintiff, but Trump lost, and the tariffs were declared illegal by this court, and the market went parabolic overnight. NASDAQ was up 500-600 points after being already up when he walked back the European tariff. And NVIDIA rallied, 8 points from 135 to 140, 9 points to 144. And it was just an absolute parabolic move in markets. And all that reversed. On Thursday, we got jobless claims, which started tilting up, which is, probably the only real relevant data lately where you can actually see the impact of a slowing economy. And the market fell back down. And really, when you look at the stock market for the last year, let's see, we closed the year last year at 58.81 on the S&P, and we're at 59.11 on the S&P, which is a 50 basis point increase. So cash has massively outperformed equities. And so here we are with a market that sucked up the short-dated auctions that were done. $82 billion of auctions were auctioned. That went fine. And the PCE came in as expected with a 2.1% core, which is right at target. And, that's pretty much the picture, which is tariffs are going to remain an uncertainty. They've always been an uncertainty. There was extreme extrapolation when Liberation Day happened, and then extreme relief when the tariffs were pushed to July. And now and so there was always great uncertainty. Now we have a certainty that tariff policy will be uncertain for an extended period of time as the Trump administration deals with the courts and possibly alternative ways to tariff, which they did late Friday night by increasing tariffs on steel and aluminum by double, 50%. So those headlines are just going to buffet us. And what it really comes down to is less so what the tariffs will be, but what the outlook for the economy is. And Nick, you've had the view that I share that we're coming on to an important period of time.
Yeah. Now, putting all together what you've said, if I was the CEO of a major US corporation, the fact that I have absolutely no idea what the time frame is, or if these tariffs are going to be in place, they're not going to be in place, this actually increases my uncertainty and increases my resolve to do absolutely nothing until I have certainty. And in the meantime, the employment market, as we saw in the weekly claims data, which came out at 8:30 on Wednesday, then preceded the opening of the market, and the market just fell in a straight line, almost 100 points, tells me that this uncertainty is increasing for the CEOs, and therefore they're going to do absolutely no hiring whatsoever in the next month or so. And we've been consistently saying that the window of opportunity for weakness for the economy via employment is the second half of May into June. So we are in that window. It makes no sense to me to bet on higher equity prices, whatever Trump headlines. He changes his mind every 2 minutes. He imposes tariffs, then extends them, then does this, does that. I think that increases the uncertainty of all the market participants, and therefore it actually enables this window of weakness to be more open rather than less open. In which case, with equities as fully priced as they are, the danger is all to the downside, in my view. If we have a look at the way the market responded on Thursday, it had every opportunity to remain high, but it gave up all its gains. And that tells me that the big money is aware that equities are A, fully priced, and B, that the dangers at the moment for the next month or so are to the downside. So that is my firm view. And I'm not going to change it until the data changes it for me.
Yeah, I mean, in terms of just NVIDIA, for instance, which is the poster child for AI. And certainly with all of the other things that have been happening with other companies and whether they're spending and can they get revenue from their AI inventions, the picks and shovels are still the poster child for AI. And NVIDIA couldn't hold a rally.
So that's basically it. And as you said, the bond auctions went very well, which to me says that in a time of high uncertainty, the short end is the place that people are going to buy. They're certainly not going to be reticent to buy it. The yield curve did really not a lot. Long bonds did slightly better, but really grudgingly. So nobody is buying duration hand over fist. They don't feel that yet that is the time, and real rates are remaining high. So the equity market has got this higher uncertainty and higher real rates. Well, they're not particularly high, but they're neither low nor are they, so high that you'd want to buy them. And therefore, I think that we are correctly positioned. We should be waiting out this period of uncertainty. And as soon as we get the certainty, then we can reposition. But at the moment, I see absolutely no reason to do anything at all. And in fact, next week, we have an important test. We have NFP, which I think has a real opportunity to be quite a bit weaker than the market expects. And if that is the case, then we will be starting again a new narrative about how the economy really is weakening. But that is for next week, and we'll see. Otherwise, apart from that, we have very little. We have PMIs, which are probably going to be hot because the economy has been doing quite well, and this is looking backwards. But no more than that. The weekly claims and the NFP are going to be the litmus test next week to see if this window of opportunity for weakness really is opening wide or not.
Yeah, I agree. We also have, so as it relates to the survey data like the PMI, you're going to see that improve relative to where it's been because tariffs have been delayed. And equity markets, which drive a lot of the sentiment within the surveys, are robust. So you're going to see that data be hot. I don't know how the employment data will play out. The direction that Nick suggests is consistent with mine, which is you're going to start seeing some weakness in the jobs data as a combination of uncertainty and stagnation as it relates to what to do. The result of that uncertainty is going to start weighing on hiring. But we also have the ECB. They're likely to cut. And the question is for the ECB is, will they then guide to further cuts, which is what their history has been lately, or guide to we may be done? And, our sense is that they're going to lean toward the latter. And that may have some sort of positive impact on euro relative to the dollar. So we'll see how that plays out. But, the themes that we're generally thinking about are really unchanged. And we would like to see the data for the next 6 weeks or so to confirm or reject our thesis.
Yes, and that's the high level point. No, this is not the time to do anything much, but wait for the data and see how it develops. I think that's really all one can say about this market because it's so headline driven by Trump, it's getting quite annoying.
Yeah, unless you bought the bottom, sold, weren't invested, sold, and then bought the bottom and rode equities up while also avoiding the long-term bond market. These portfolios are not making much money this year. So cash is a pretty good thing. We don't see the market taking off without significant changes. And so, we're going to play it by ear.
Absolutely. Speak to you next week, Andy. Bye-bye.
Next week. Okay, good.